Imagine waking up one morning, checking the news, and finding out the cost of selling your products to your biggest customer has suddenly doubled. Not a nightmare. For countless businesses, workers in India, this became a stark reality just hours ago, today, August 27th, 2025. Welcome to the Deep Dive. Today, we're getting into a major economic tremor. It's shaking India's trade corridors right now. The United States has just slapped a staggering 50% tariff on a wide range of Indian exports. And the fallout is immediate, it's undeniable, it's hitting everything from, bustling workshops to government strategy sessions.
Yeah, and our mission today is really to unpack this seismic shift for you. We need to explore where this came from. It's rooted in, both calculated economic strategy and some pretty complex geopolitical moves. We'll look at the impact on specific industries, sure, but also crucially on the real lives of millions. And ultimately, what does this all mean for India's path forward in this, rapidly changing global economy? We really want to get into why this is happening and what the short-term and maybe even long-term implications are for everyone involved.
The scale is it's huge. We're talking about an immediate threat to, $48.2 billion worth of exports to the U.S.
That's the figure the Indian government is working with, yeah, a massive chunk.
And this isn't just numbers on a spreadsheet, right? This is about people's livelihoods, millions of them. And it's hitting the momentum of one of the world's fastest growing economies. It's a really severe test, suddenly.
Absolutely. And that 50% wall, as you called it, it took effect today, August 27th.
So no phase-in period?
No, none. It's not gradual. It's an overnight doubling of cost for Indian goods heading into the U.S. market. And considering the U.S. buys roughly 20% of India's total exports, we're talking about $87 billion annually, this is a very substantial hit.
Okay, so what specific products are getting hammered the most here?
Well, the list includes some really vital ones. Textiles, obviously, gems and jewelry, a huge export earner, leather products too, and even automobiles.
So think about, those leather shoes from Agra, or the textiles from Tamil Nadu.
Exactly. Suddenly, they're significantly more expensive. It could easily price them right out of the U.S. market.
Which brings us straight to the human impact.
Right. This is where you connect the policy to actual people. Think about Tiruppur, India's knitwear capital, or the gem cutting units in Surat. You have millions of workers, small business owners. They're all facing this incredibly uncertain future now. It's not just some abstract policy tweak. It disrupts lives, family incomes, maybe even dreams they've built for years.
Yeah, and that $48.2 billion figure you mentioned earlier, that's the government's estimate of exports genuinely at risk.
It is, and that could seriously slow India's economic growth. We're talking potential job losses, widespread ones, and maybe even shaving, 20 to 50 basis points off GDP growth in the next fiscal year, FY26. That's the fear.
We already saw the markets react, didn't we, when this was first announced back on August 7th?
Oh, yeah. The immediate reaction was sharp. The BSE Sensex dropped 483 points, and the Nifty 50 hit a 3-month low. The financial markets felt those tremors instantly. They saw this coming, to some extent.
Okay, so this is clearly a dramatic move. Such immediate impact. Let's unpack the why. Why now? And why such a high tariff? What's behind President Trump's executive order?
Right, that's the critical question. And the answer isn't simple. It's kind of twofold. On one hand, you have the economic strategy angle, the America First framing. President Trump has been vocal for a long time about India's own tariffs on American goods, which he sees as too high. And he points to India's significant trade surplus with the U.S. Remember, $87 billion exported from India in 2024, much less imported. So Washington frames this as tackling unfair trade practices. That's one part.
Okay, so that's the trade balancing argument. What's the other layer then?
The other layer is definitely geopolitical. There's no hiding it. A big chunk of this new duty, an extra 25%, is explicitly linked to India buying discounted crude oil from Russia.
Ah, the Russian oil connection.
Exactly. Washington sees that as undermining the international effort to isolate Russia economically because of the Ukraine conflict. So the U.S. is using trade very clearly as a lever to pressure nations it feels are maybe too close to Russia right now.
That mix of economic and geopolitical reasons is fascinating. You mentioned other countries face high tariffs too, like Brazil at 50%. But competitors like Vietnam or Bangladesh have much lower rates, maybe 19–20%.
Yeah.
Even though Vietnam had a bigger trade surplus with the U.S. last year.
That's a really sharp point, and it highlights how these things are intertwined. It's not just separate levers, they're used together. The economic argument, the America First part, gives the U.S. leverage to push on geopolitical issues like the Russian oil. It creates this really difficult situation for countries like India, Pick your poison.
So trade policy becomes a foreign policy tool.
Precisely. It signals that economic partnerships can be, well, weaponized if strategic alignments aren't what the U.S. wants. India's trade practices become a target not just for economic reasons, but because of its energy choices too. It's complex.
And the immediate effect on competitiveness is just stark. Take those leather boots from Agra again, suddenly 50% more expensive for an American buyer.
Right. It pushes consumers almost immediately towards potentially cheaper alternatives, maybe from Vietnam, maybe Bangladesh. Those countries face much lower tariffs, as you said. So this isn't theory. It's happening now. Shifting orders, changing consumer behavior.
And for India, those geopolitical choices about oil suddenly have very painful, very real consequences for its exporters.
Incredibly real. And yeah, India isn't totally alone. Brazil faces 50% too. Others are in high brackets. But the difference compared to competitors like Vietnam, especially given Vietnam's larger trade surplus in 24, it does seem baffling.
It raises questions about consistency, doesn't it? Is it really just about trade deficits?
Or something more strategic? That's the question hanging in the air.
Okay, so let's zoom back in on the ground in India. Where is this tariff wall hitting hardest? You mentioned the backbone industries. Textiles, gems, jewelry, leather, food, autos.
Yeah, these are the big ones. Very labor-intensive sectors. They employ millions. And critically, many are in small and medium enterprises, SMEs.
And those SMEs are probably least able to just absorb a 50% cost hike overnight.
Exactly. They often don't have the margins or the capital reserves. It's a huge shock to their system.
Can we break down some specific vulnerabilities? Textiles, for example?
Oh, sure. Textiles and garments. That was over $5 billion in exports to the U.S. last fiscal year. A massive driver, especially in states like Tamil Nadu. That 50% tariff puts countless jobs in places like Tiruppur directly at risk.
And gems and jewelry.
$12 billion exported to the U.S. last year. Think about the jewelers in Surat and Jaipur. World-renowned craftsmanship, a 50% price hike. Orders could just vanish. It's a real possibility.
You mentioned a leather exporter earlier, Kurandawar.
Yes, in Agra. He exports to big names like Zara. He warned of a substantial hit, said it could make his products commercially unviable.
Wow.
That's the word he used. And then you have ripple effects in autos, food, disrupting supply chains, cutting factory orders, potential layoffs in industrial hubs like Gujarat, Maharashtra. It's worth noting, pharmaceuticals and electronics seem to be spared for now. That's a small mercy, maybe.
A sliver of relief, perhaps, but probably not enough to offset losses elsewhere.
Unlikely. The scale in these other sectors is just too large.
And behind these numbers, these sector impacts, are the individual stories. You mentioned a worker in Tiruppur, Rajesh.
Yeah, Rajesh, a textile worker. Stitching shirts for American brands, supported his family, sent his daughter to school. That's his livelihood. Now his factory's cutting shifts. He's quoted asking basically, if the orders stop, what do I do?
That's the human cost right there.
It is. And Purandawar, the leather exporter in Agra, he echoed that. He's chair of the Council for Leather Exports there, seeing the industry grow thanks to U.S. demand. Now he predicts an absolute shock.
Yeah.
Potential factory closures. And he said quite powerfully, this isn't just about profits, it's about families, communities, and dreams.
It's hard. And the Federation of Indian Export Organizations, they estimate SMEs could see shipments halved.
That's their estimate, halved, which means countless jobs are immediately on the line. Not in some abstract future, but right now.
So given this enormous pressure, how is India responding? What's the strategy? Prime Minister Modi has definitely taken a firm public stance.
He has. At that rally in Gujarat, August 25th, vowed to protect farmers, small businesses, the dairy sector, accused the U.S. of economic selfishness. His words were clear. The interests of our people are paramount.
Strong words, but what about concrete actions?
Well, the government's launched a multi-pronged strategy, trying to cushion the blow. They're looking at tax reforms to boost local consumption, timing it for Diwali, hoping people buy cars, appliances, insurance, stimulate domestic demand.
Trying to compensate internally for lost exports.
Exactly, and also offering financial incentives, things like low-interest loans for exporters to help them, stay afloat, plus a big push for diversification, actively exploring new markets, Latin America, Africa, Southeast Asia, trying to reduce that heavy reliance on the U.S.
And talks with the EU.
Yes, accelerating talks with the European Union for trade diversification is also part of that strategy, though it's worth noting that planned visit by a U.S. trade delegation to Delhi this week, it got canceled.
Oh, that doesn't sound good for a quick resolution.
No, it certainly dims hopes for that, in the immediate term anyway.
And it's not just the government, right? We're hearing calls from industry leaders too. Anand Mahindra.
Yes, Anand Mahindra, chairperson of the Mahindra Group. He urged the government to, quote, radically improve the ease of doing business and tap into tourism as a foreign exchange force, make India irresistible for global capital.
Ideas like single window clearance for investments, dedicated tourism corridors, basically build resilience from within.
That's the idea. Make India a more attractive place for business and investment overall, regardless of these specific tariffs.
But the diplomatic track seems stalled for now.
It does seem like a standoff. The canceled visit is a sign. Commerce Minister Piyush Goyal vows to secure and advance our national interest. But it's a tough path. You have Trump's tactics, maybe rooted in his art of the deal approach, aiming for concessions?
There were even hints of secondary sanctions.
Hints, yes, though the specifics of what that might mean remain unclear. It adds to the pressure, certainly.
And even before this, those 5 rounds of bilateral trade talks hadn't yielded a deal. What were the main sticking points?
A major one consistently has been India's resistance to opening up its agriculture and dairy markets to U.S. imports.
Politically sensitive.
Hugely sensitive. These sectors employ millions upon millions of people in India. It's a red line the government has been very reluctant to cross.
Okay, let's widen the lens a bit, put this in the global context.
Right, because India's situation, while severe, isn't happening in a vacuum. It's part of a broader pattern. President Trump's administration has imposed duties on, nearly 70 countries since February 2025?
70? Wow.
Yeah, rates from 10% up to this 50%. China's facing 34%. Canada and Mexico got hit with 25% earlier. The stated goal is always boosting American manufacturing, reducing trade deficits.
But the critics?
Critics warn about rising prices for American consumers, obviously, and major disruptions to global supply chains. We're probably already seeing some of that.
So how does India's situation compare? What makes it uniquely vulnerable, maybe?
Well, that's a key point. Unlike China, which has this enormous domestic market it can pivot towards, India relies much more heavily on exports for its growth engine. That makes it more exposed.
And the 50% rate itself?
It's the highest among major U.S. trading partners right now. That puts India at a significant disadvantage against rivals like Vietnam and Bangladesh in the U.S. market. And maybe it highlights another vulnerability. India's growing economic power hasn't yet translated into, let's say, equivalent global diplomatic clout.
Meaning it's an easier target for this kind of pressure.
Potentially, yes. Less immediate international backlash compared to targeting, say, a major European ally or China. It shows a vulnerability for emerging economies.
Could this push countries towards more regional trade blocs, less reliance on single markets like the U.S.?
It could absolutely encourage that. Diversification, regional partnerships, rethinking supply chains, maybe leading to a more fragmented global manufacturing landscape.
And back on the ground in India, we're hearing mixed reactions. Some resilience, some fear.
Definitely. You hear from people like Anil Sharma, a textile factory owner in Tiruppur. He's worried, naturally, but also expresses hope, saying things like, we've survived tough times before, maybe this pushes us to find new markets, that kind of resilience.
But then you have Paran Dawar, the leather exporter,
who remains less optimistic. He stresses that small businesses just cannot absorb a 50% cost hike. He's urging the government for direct, immediate relief.
And trade bodies are echoing that call.
Loudly. The Apparel Export Promotion Council, the Federation of Indian Export Organizations, they're lobbying hard, asking for support like deferred interest on loans, maybe allowing special economic zones to sell goods domestically, which they usually can't.
But can that kind of aid really make up for a 50% tariff?
Officials are admitting, privately at least, that no amount of aid can fully offset losses of this magnitude. It highlights just how deep the challenge is.
So bringing it all together, India is clearly at a crossroads here, a critical juncture. These tariffs could genuinely cripple key industries. That seems undeniable.
It does, but as we've touched on, it also presents this incredibly challenging, maybe even forced opportunity. An opportunity to rethink, to reform its economic strategy fundamentally.
Those solutions we discussed, boosting domestic demand, diversifying trade, making India more attractive for capital.
They're not just nice-to-haves anymore. They feel absolutely crucial now. And it's interesting to note Prime Minister Modi's upcoming visit to China for the Shanghai Cooperation Organization Summit.
Signaling a pivot.
Possibly signaling stronger alignments with other powers, including Russia and Brazil, who, remember, also face high U.S. tariffs. This could reshape regional dynamics.
So for you listening, watching this unfold globally, What does it all mean? This isn't just another trade dispute, is it? It feels like more.
It feels like a profound test of India's resilience, yeah.
Uh,
And a really fascinating real-time case study showing how global economics and geopolitics are just tangled together now, inextricably.
and the big questions remain. Can India pivot fast enough? Find new markets? Boost its domestic economy? Navigate this pressure?
Or will these tariffs trigger something deeper, a more lasting economic slowdown? Will it reshape India's place in the global economy for years?
It leaves us with this really compelling question about where international trade itself is heading. Is this a temporary storm in a teacup, a blip? Or are we actually witnessing the dawn of a new era? A more fragmented, more strategically driven global economic order?